Hello, and welcome to this demo on commissions in the insurance space, where I'm going to be walking through a solution built by Accelerize360 utilizing the tools of Sigma and Snowflake. Now, my name is Marley Shees, and I lead the analytics practice at Accelerize360, and really looking forward to go through all of the information we have to show today. So starting with the agenda here, we're going to cover a bit more about us at A360. We're going to talk about the problems faced with commissions in the insurance industry. We'll talk about why we know so much about insurance and how customers could benefit from a solution like this. Then we'll get into the demo and finally wrap up with some real-world use cases we've seen with the customers that we've implemented this sort of solution for. So starting about A360, the focus at our firm is on providing an enterprise analytics strategy to our customers. We do this by enabling process automation and optimization and delivering on that vision of a trusted single source of data. We also deliver industry-leading visualizations and data insights, and again, just focus on being your trusted advisor in this space. We offer a number of different engagement solutions, whether it's a traditional project-based implementation or a managed services model, or even taking that step back for a data advisory engagement where we're focused on ensuring that our customers have the right data strategy put in place. We have over 500 customers, and out of those, we have specific 50 different insurance projects that really help emphasize the point that we know this space well. But to talk on some of the challenges in the insurance industry, we first need to cover the complicated value chain, since we have distinctly different entities with carriers, MGAs, and brokers as the big three. All of these entities care about things a bit differently, but at the end of the day, they all care about selling policies. But outside of those big three, we also have FMOs, NMOs, IMOs to only further complicate things. Now, for any of the downline entities such as MGAs and brokers, commissions are the lifeline of the business and their key revenue channel. Another problem we need to talk about is old school data sharing, where APIs are rarely used in this industry, and oftentimes data is shared through traditional file-based transfer protocols. The formats are often very complicated. Each carrier has a different format, and then these formats can change over time, making it difficult to provide an automated solution that's going to scale as those processes change. This results in calculations being very error prone and requiring accounting armies to even deliver on these insights. And then finally, in this industry, there is a complex commission structure, meaning that we have to look at all of these different data points when we're trying to calculate and understand what a commission result is going to look like. We have to take into account the carrier, the downline level of the entity, the policyholder demographics. All of these different pieces influence the commission that's paid out. And so to talk a bit more about why we know so much about insurance, I want to talk about the tool Dinero that we've built internally, which is a solution that we've productized from our experience dealing with this common issue of commission management. Now, Dinero has three key pillars here. First and foremost is helping to forecast data by ingesting policies and generating that expected revenue. The second key pillar here is recovering revenue by reconciling expected and actual data to better understand the delta and then be able to go back to a carrier and collect on that delta. And then finally, optimizing by better understanding the lifetime value of policyholders and using that to dictate data points such as ad spend. Now, how do downline MGAs and brokers benefit from a solution like this? First, we'll talk about identifying that revenue loss and claiming that back from carriers. There's a large discrepancy between expected versus actuals normally, and a business needs to be able to compare those two so they can come back and be able to get the revenue that they deserve. Additionally, MGAs and brokers care about optimizing their marketing spend by focusing on high lifetime value policyholders. Since margins here are wafer thin, sales teams are often overwhelmed by bad leads. And so allowing them to focus on the high quality leads can massively boost productivity. And then we have company valuation here, where for the CFO organization, they need to have a clear understanding of the acquisition target for what their own company may be worth. And that's, again, driven by lifetime value. And so then changing perspectives and looking a bit more at the carrier point of view, we first need to talk about becoming that carrier of choice for agencies, since MGAs and brokers, they deal with multiple different carriers. And one reason that they may choose recommending one carrier's policy versus another has to do with what it's like to partner with this entity. And that could deal with commission calculations and the communication of data and ensuring that that is accurate. Another here is margin analysis, where a carrier cares about understanding the revenue and payouts that may be impacted by CMS changes. And then finally, forecasting that revenue and payout, having weighted forecasts based on a number of different data points such as lapse rate, product, or region. So now to get into the demo here, let me switch my screens. And the first thing we have to show is this homepage here. Now, all of this front end is built on Sigma, and from a back end perspective, all of this data is coming from Snowflake, where we have about 480 million rows of data that's being crunched to showcase the visuals that you have here. So on this snapshot view, there's a couple of key KPIs. We have total policies, breaking that out by status. We have forecasted monthly revenue, also breaking that out by product. And then likewise, we have forecasted monthly revenue with that additional data point of seeing the type. Where is this new business? Is this a renewal? Is this clawback revenue? So then changing views here to the revenue report, this would be digging in a bit deeper to the specific revenue generated by these policies. Now, everything that we're showing on this dashboard is from the perspective of a carrier, but we do have separate dashboards to showcase things from an MGA perspective as well as from a broker perspective. But in this revenue report, we're looking at that revenue and premium that's been sold from the start date of the policy, from the revenue type, is it new business, as well as what agency the revenue is coming from. We have the ability here to interact with the data and filter down to specific agencies to better understand and compare how our top performers may be performing. And then we have another visual here below where we have some actions to change the way that we look at this premium sold, being able to look at this by agency on a quarter by quarter basis. We can switch that to month over month if we would like, or we can switch that to year over year. Then we also have it by revenue type to see, is this coming from new business? Is this coming from a clawback? And then finally by product, is this an MA policy or is it a PDP? The next view we have here is persistency. Now, the purpose of persistency is really to help understand how our forecasting models are performing. In an ideal world, the actual and forecasted data points are exactly the same, but we know in reality there's going to be a discrepancy. And so these views help us to better understand where that discrepancy is coming from and allow for fine-tuning the forecasting model to be as accurate as possible. So to start up top, we have terminated policy cash flow analysis, where we're able to look at, again, that forecasted revenue, see that forecasted revenue with persistency adjusted, and then what the actual revenue is here. And then below, we have the lifetime value explorer, similar kind of piece here, but from an LTV perspective, where we can filter down to specific policies and be able to better understand that forecasted revenue by the individual policies themselves. Next, we have overrides, and the overrides view is really an important concept to understand since the focus on this tab of our dashboard is all focused on writebacks. This is enabling users that are consuming the analytics to write back data to the data source itself. A couple key use cases here to talk on first. Carriers, when they send out their data, it often changes over time, where you have the policy and you have the status today, but that is going to change throughout the life cycle of the policy itself. So the first piece we have here is we can go to a specific policy. Let's say I select this one here, and I have the ability to do this write back of overriding the status. I can change this from terminated to active because maybe they came back and canceled their renewal request, or their termination request. So now I've been able to go and set notes about why the status is being overridden and set that new overridden status. So I can save that here, and we have that data point saved. Next, we have schedules here, and this is an important piece to understand where carriers send out their commission schedules within the written year of the policy itself. But these commission schedules, they always are changing. And maybe the agreement with the broker is on a new schedule. And so there's reason and a need here to be able to edit these schedules itself. So for example, here I can click into a specific schedule, and then I can go below and be able to make edits to this data. So in here, I can override the amount, the payout amount for this different schedule, make those changes in this view, add notes as to why it is that we're making the change, and then go and click that save. The final table we have here is the actual approvals, where these edits that we've been making, they need to get approved by the right team member to ensure that they're accurate, and then enable them to actually feed back into the visualizations that we're showcasing on the other views. So this final approval view would be limited to a specific set of users who have the permissions to handle approvals, but we could come in here, handle that approval, and click save. All right. And then the last view we have here is the revenue forecast. As I talked about earlier, for the CFO organization, this is incredibly important to understand the pulse and the health of the business, and better be able to have metrics when we're thinking about acquisition amounts. So when we're looking at this view, there's a number of different inputs and actions that we can take to see variation in these visuals. We have a couple of key KPIs up top. We can filter to specific states, specific agencies to see how we're performing in those areas. But then we also have this revenue forecast view, where we're able to forecast and choose the forecast date. We're able to see, do we want to see month over month, quarter over quarter, year over year? But then we're also able to change some of the data points, such as the lapse rate here, where maybe I want to look at this as a 20% instead of a 10%. And month over month growth, actually, I think we'll look at maybe a 30% growth month over month. So as I go and make these edits, we'll wait a minute for the visual to go and update. All right, and you'll see these lines are now much closer together because we don't have as much of a growth, but we also have increase in lapse. So let's go back. I'll do 10% lapse and go back to 50% growth. And you see how quickly it is that adjusted because we had already previously done this calculation. And this is all crunching, again, those 480 million rows of data to provide a visual like this. We then have the breakdown of forecasted revenue by the policy effective date. So being able to show these stacked bars to see how we got to this final number. And then we finally have another persistency view here where we can adjust that persistency factor to, again, adjust these different visual lines to see forecasted revenue with persistency adjusted, forecasted revenue by itself, and the additional persistency that's being adjusted in this view. All right, and that's everything we had to show from the demo itself. So let me jump back to my slides here real quick. And want to talk about a couple key results that we've seen with real-world customers through our experiences implementing this solution. First, we have a large MGA where we were able to, through this project, normalize the client's complex carrier network into a consistent data model. We also implemented complex lifetime value logic to allow for both deterministic and predictive analytics. This all resulted in being able to generate a 10-year revenue forecast, which previously took months of manual effort to put together, now in an automated fashion. The second use case we have is a nationwide Medicare insurance broker. We were able to reconcile both the earned commissions with the expected commissions and enable this business to claw back $900,000 in the first year of this implementation. And then finally, we had an employee benefits company who we were able to deliver an automated solution for commission calculation and processing, be able to integrate that with their existing payroll and producer portals, which resulted in increased accuracy of billing and reconciliation. So in summary here, the solution that you've seen is a flexible solution for carriers, MGAs, and brokers. It accommodates commission structures both for personal and commercial lines of business. It increases accuracy of both short-term revenue and helps to allow for forecasting of long-term revenue. And all of this while keeping your data secure, but giving end users control over the access and editing of the data. And with that, I thank you for your time. I hope you learned something new, and thanks again.